Is my voice audible now?
Yes, audible.
Calfas is audible,
Yes,
huh?
I said it's audible. Yeah. Yes, your voice is
Okay,
audible.
okay. So thank God the network is back now. So let me just continue like that. So basically, yeah. So I drew something here the other time before the network gave us issue. I said we have an indecision doji. So these are, let me first project the three dojis we have for you before I go back to this particular part of my screen. So let me show you what I'm talking about. You see? So now you can see what I'm saying here. We have three families of doji. We have more than three, but let's focus on these important ones for now. You see these three, this first one is the indecision. Don't use it to buy. It's a candlestick that is to fail. Same thing with this one. The buyers are kind of in that market, but I'll still tell you not to use it to buy. Same thing for this gravestone. Don't use it to sell. You understand? So let's go back to the trading view app and let's explain better there. So I'll share my trading view app and I will just continue. Now, this particular one, what you can notice happened here was that the market coming. The market opened at this particular level here and closed around the same level. That is why you can see that there is no green or red. I don't know if I'm making sense. What I'm simply saying is the open price and the close price are almost at the same level or exactly the same. That is the reason why we have black here. So this level here is still going to remain our low. It's still going to remain our low. And this other level at the top here is still going to remain our what? It's going to remain our high. So let me type it out so that you guys can see it. This market, the story behind this formation of this doji candlestick. Now, let me first write it out. You should understand that it's an indecision candle. Doji. You understand? Let me put it in brackets. Indecision. It's an indecision candle. You are not meant to use it to buy. Now, exactly the way you understand that there are some candlesticks for buying and there are some candlesticks for selling. That's the same way you need to understand that there are some candlesticks you are not supposed to use to trade because they are not reliable. They are not reliable. Because if you use them to buy or use them to sell, they will fail. Once you see them like this, just fold your arm and be looking. Don't use them to enter trade because they will fail you. Yes, that's an example of this candlestick I'm giving you, which is doji. That is that. Now let me give you another example of doji family. We have something like this. We have something like this. We have something like this. Okay, let's make it green. This one is dragonfly. What did I say? The dragonfly is basically used for buying, but I will advise you not to use it to buy. Why? Because it's used to fail. It's not reliable. Yes, it's not reliable at all. Once you try and enter that trade, you will lose your money. I'm not saying that sometimes it will not work. Oh, don't get me wrong. It can work, but as a trader, we don't want to be banking on whether it will work or not. We want it to work because we are using money to trade. So we are not ready to gamble with our money. That's why I'm advising you now that once you see those kind of candlesticks, wait for market to give you another confirmation, maybe a pin bar or an hammer. After you see this dragonfly, you wait for another bullish candlestick confirmation before you now enter that trade. Look at it. So what I expect now is that after market showed you this thing, let me delete it. After market show you exactly what you're seeing on my screen now, you want market to give you something like this. You want market to give you something like this one, this pin bar here, or the market should give you an hammer as an extra what candlestick confirmation so that you can enter that trade. So, but if the market did not give you any confirmation, don't enter that trade, leave it. You understand? So this particular level still remains our what? It remains our low. Let me put it down. this level here remains our high. So that is that. Now, this particular candlestick you're seeing is initially meant to buy, because you can see that there's a little bit of green color there. So there's a little bit of buying pressure in this particular candle, and that's the reason why we can admit that okay, it's supposed to be a buying candle, but it is not able. It can easily fail. When you use it to enter that trade that you are planning to enter, you buy with this what is it called? Let me type it out. Dragonfly doji. It's called that dragonfly doji. Dragonfly doji. Particular dragonfly doji you're seeing here is meant to be used for buying, but because reliable and it is a weak buying candle, don't use it. It will fail you. You know, that is the reason why we used to ignore it. Basically, the market now has tell us that I opened at exactly or close to where I closed. Yes, so that's the reason why the price you're seeing here, I put it at open/close. You understand? That is that. The next thing we have is our what is this last one? The gravestone doji. The gravestone doji. Let me draw it out. The gravestone doji. Now, this gravestone doji is still the same thing, exactly the same picture we have with those other ones I mentioned earlier. Is what you need to be thinking about it too. Gravestone doji is supposed to be meant for sale, but because it is not reliable and it usually fails most of the time when we see it, we prefer not to do what? We prefer not to use it. So basically, this particular market opened and closed close to the same level where it opened. You understand? It's not necessarily that the market closed at the place it opened. It might just close very, very near that same level where it opened. You understand? So let's say, for example, the market opened at 1.16001. Then the market now closed at 1.6. The market opened at 1.16001 and closed at 1.16002. You can see how close that market closed, how close it is. So it means that the market didn't really, there was not much participation in that market. You understand? So there's an indecision between the buyers and sellers. You understand? So we don't want to enter the candlestick because we don't know who is winning. And in this particular candlestick confirmation we are looking for, we need to know that these particular people, the buyers are the one in control, or this particular market, the sellers are the one in control. You need to be sure of your buyers. And I've been talking to myself since morning. Yeah. Network already took me out over like 10 minutes ago, safe. Okay. So basically, let me just explain again since network gave us issue. I said we have three members of this doji family. First thing I said we have the indecision, that's the doji, the one that has this black color, telling you that where this market opened and where it closed were very, very close to it. Like it opened and closed at a very, very close. The prices are very close to each other. For example, maybe the market opened at 1.16210, then closed at 1.16211. You can see that it's very close, and you cannot be sure if it's the buyers that are in control of that market or it is the sellers that are in control. That's why I told you that don't trade doji candlesticks. Don't trade them. Don't trade anything doji. Yes, whenever you see them on your chart, wait for extra confirmation. Maybe you will see an hammer that will follow that doji, or a pin bar that will follow that doji. That's after that doji form. You wait and wait and wait. Let this market give you another candlestick like a pin bar or an hammer before you now decide to buy or you sell or whatever. It depends on your decision. Then the second one we have here, okay, I told you that the high and low is the same thing. So basically what happened here was that when this market opened at this level, the sellers pushed the price. They pushed it to this lowest level. Yeah. But before the candlestick closed, now we are still using 15 minutes time frame as our example now, as our illustration. they pushed the market from this level that the sellers pushed it to, that's the lowest level. They pushed, they pushed past this open and close level. They pushed to this highest level here. You get what I'm saying? They were able to push the market to this highest level. But before that 15 minutes time frame finished, the sellers took charge again and they pushed that market. They push it again from that level here. They push it. They push it. And the market finally closed around the same area where it opened. That is why we call it a doji candle. That is the story behind that. Let me move to the next one. The dragonfly doji. I said this particular doji candlestick was naturally meant for buying. Like, we were supposed to say we want to use the candlestick to buy. But the reason why we will not use it to buy is because I told you earlier that doji candlesticks are not reliable. The family of doji, don't rely on them whenever you see them on your chart. They will fail you. Yes. Whenever you see them on your chart, run. Don't use them to make decision because they'll fail you. Now, what happened in this market was that the buyers actually had upper hand, a little bit of upper hand than the one of the sellers. But the power they had over the sellers was not too much. Like, it was not a clear dominance. Yes, the buyers did not clearly dominate the sellers. The sellers too, they tried their best. So you cannot really tell who the winner is in the market. So what basically happened when this market opened at this level was that the sellers pushed the market. I told you that it's the sellers that is at this top here. I'm coming. I told you that the sellers are the one here. This is their zone. They are the one at the top of this week. Then the buyers are the one here. I told you people that day. Let me type it out. I don't want to hear that somebody did not understand. The buyer, this is buyer's zone. And this top here, this upper week is the seller's zone. Is the seller's zone. So now what you need to understand here is that when this market opened at this level here, the buyers actually won that war, but the winning is not too clear. It was not a clear winning. That's the reason why you can see that the body of the candle is not big like the number one we used to have. That we used to have big candle, big body like this. It is very tiny. It's tiny. That's to tell you that this was a very clear, war between the sellers and the buyers. They don't want to agree for each other. But one way or the other, the buyers won. They won. But it is not a clear winning. So that's the reason why we say that we are not going to be using it to what? We are not going to use it to buy. Because we want a market that is clear that the buyers or the sellers are winning so that we can make profits from that market. If you enter with this kind of doji, this kind of tiny body candlestick, you will lose your money. Most of the time, they used to fail. Sometimes they used to work. Don't get me wrong. They used to work. But most of the time, they used to fail. And as a trader, you are using your money to trade. You don't want to be gambling and be expecting price to do what you want when you know that this particular thing you are using to trade safe is a low probability candle. You understand? So as a trader, don't use it to buy. Don't use it. Leave it alone. Let the market give you another confirmation with either a pin bar or an hammer. So what the market did was, the sellers did what? They pushed the price to this low level. But before the time that this is the 15 minutes candlestick, before 15 minutes finished, the buyers, they now push the market again. They push it up to this level, up to this highest level. You can see what I'm doing here. This is our high. This is our high at this level here. This is our high. Market reached this level as the highest price that this candlestick recorded. But because of the sellers too, they were actively participating in that market. The sellers too, they pushed that market from this high. They push it from this high and they push it, and the market finally closed. The market finally closed around the same area where it opened. That's why I write open/close. Is that the market closed exactly where it opened, or it closed close to that place, near that level? You understand? So that is that about that. Let me explain this one again. This last one. We have this. I told you that this one, the name is called gravestone doji. It's called gravestone doji. Gravestone doji. This one is initially meant for selling. Like naturally, we're supposed to sell when we see this kind of candlestick, but because of the body of this candle is not big enough, it's too small. You understand? That's telling you that the sellers didn't clearly dominate that market, but they won. But the winning is not a clear winning. So, and as a trader, we don't want to be banking on a low probability setup. Yes, so that's why we are not going to be using it, because it will most likely fail if we use it to sell. You understand? It will most likely fail. So the only reason or way we can trade this gravestone doji is for us to wait for an extra confirmation, maybe a shooting star, something like this, a shooting star, this one I'm showing, or maybe a shooting star or an inverted hammer. So after you see that gravestone doji, don't enter the market. Wait for the next candlestick to form. Once the next candlestick form and you see an inverted hammer, enter that trade. Enter that trade, because now this is an extra confirmation, an extra candlestick confirmation that the market is now selling. So you can enter a sell position. Again, if you see shooting star, it's also a good confirmation to sell. So you either see a shooting star or you see an inverted hammer after you see a gravestone doji, before you decide to sell with a gravestone doji candlestick. But if you don't see those confirmations I just mentioned earlier, don't sell with gravestone. Leave it alone. Let the market be going. It's better to miss a trade than to lose a trade. Hold that thing. If you did not enter a market because the market did not give you a clear confirmation, it is a very good thing. Just package your money, keep it one side. Anytime the market give you what you want to see, then you enter a trade. But if you go and do strong head and you go and enter that market, even when the market did not give you a clear confirmation, and you lose that money, tell me which one is better? Is it a winning trade, sorry, a losing trade, or a missing trade? It's better to miss that trade, so that your money you will not lose your money. Your money will still be in your account. You understand? And the market will always give you an opportunity. Yes, the opportunity in the market never ends. So whether you should miss a trade, the market will still provide an opportunity for you to enter another trade. So there's no need for you to rush. The market is always available for you. It's always going to be providing you with multiple opportunities, countless opportunities. All you just is to what? Be patient in the market. So that's all for doji candlestick and the families of doji. The next candlestick I'll be treating is okay. The next candlestick I'll be touching is spinning bottom and spinning top. I've talked about this doji, dragonfly doji, and gravestone doji, and I told you that this first one means indecision. You understand? It means indecision. And let me try and explain something better. Okay, let's just continue. Let me explain this one. Now, this spinning bottom you're seeing here, this spinning bottom is almost looking like doji. If you look at it very well, the wick that you have at the higher level and the wick at this lower level is almost the same thing. Like they're like equal wick at the top, equal wick at the bottom. You understand? But this particular one it has more bigger body than the doji families. You understand? You can see what we have here. We have the wick at the top here. We have another wick at the bottom here. But the wick are like very close. They are very equal. They are like very equal to each other. And we have a red body. So now let me go back to my trading view and explain this thing on our chart. Let me explain it on our chart. So this trading view you're seeing here, I will explain. Now, this particular one I drew here earlier. Now, the open and the close is not exactly at the same level. Let me explain again. This particular doji you're seeing here, this indecision doji I told you about, this indecision doji. You understand? The open and close is like in the same area. But you see this one, the open and close are not exactly in the same area, but they are very close to each other. Let me just try and indicate something here. So let's assume that this is our open, this is our open, this is our open, and this is our, let me just put it at the top here. and this is our close. This is our close. So let me clone it. Let me try and explain it better. So I'm very sorry, it was a mistake initially. Yeah, it's supposed to be clearly explained that. Sorry, I'm very sorry. This is the open and this is the close at the top. You understand? This one, it will open at the top and it will close at the bottom here. You understand? So, but it is very close to where it opened. The close level is around the same place where it opened. You understand? That's all you need to know about this. But you see this particular one that is showing black, it's telling you that market open and close at the same level. You understand? Now the next one we're talking about is spiny. Let me draw it out for us. This is called the spinning bottom. The spinning bottom. Now all these green candlestick I'm drawing, you are going to be seeing them at the top, sorry, at the bottom of a trend. I don't know if people are getting me. You're going to be seeing green candlesticks, anything green candlesticks, the ones I've been drawing since morning. You're going to be sighting them at the top of a trend. This is what I'm trying to say. Now look at this chart. Look at this chart you're seeing here. Look at this chart you're seeing here. Now, what you want to see is, you see this spinning, this red candlestick you're seeing, this one. Let me make it big. You see this thing? This thing looks like this spinning I'm drawing now. This one you're seeing. You're going to be seeing spinning top. That's a red one, a red spinning candle. You see it at the top of a trend. You understand? You'll be seeing it at the top. You'll be seeing it at the top. Then you'll be seeing green candles, the ones that are green, the one we want to be using to buy. You'll be seeing them at the what? You'll be seeing them at the bottom of a trend. Something, you see this hammer you're seeing here. Let me make it bigger. You see hammer. You can see. You are seeing it at the down level. You understand? This is a clear movement from up to down. Market is coming like this, come to this down level, then went up again. You see what I'm doing? Then it came down again. Now, this bottom is where you'll be seeing green mostly, and this top is where you'll be seeing red. So those candlesticks I'm explaining to you, but expect them to be at those levels where I pointed. So you are expecting to see your buy candlestick at the bottom of a trend, and you're expecting to see your sell candlestick at the top of a trend. So now let's continue our explanation. That was just by the way. Even if I do not explain it now, I will definitely explain it when I start teaching you how to spot and identify all these things I'm drawing for you on that real chart. You understand? I will explain it there. But let's just continue. Now, I said a green candlestick will open at the what? At the bottom. This is a spinning top. Let me write it out. Spinning bottom. Spinning bottom. You are going to see it at the bottom of a downtrend. Sorry, at the bottom of a trend. So take for example, the market is going like this. The market is going like this, going like this, going like this, going like this. The only place you are expecting to see a spinning bottom is this place. You are expecting to see spinning bottom in this place. You are expecting to see it in this place. You understand? You are expecting to see it in this place. If you see spinning bottom, if you see it at this top here, you understand? If you see spinning bottom at this top here, don't use it. If you see spinning bottom, if you see it here like this, don't use it. You understand what I'm saying? Don't use it. Let me cancel it. Don't use it. This is where you want to be seeing it. You want to be seeing spinning bottom here. Here. So if the market continue trending too, you don't want to see spinning bottom here. This place now, if you see spinning bottom here, just know that it is appearing at the wrong position. It's appearing at the wrong place. You don't want to see it here. So I've cancelled it. You see what I'm saying? So that is that about that. So let's try and continue what we are doing. Let's try and continue what we are doing. Now, market will open at this level, this bottom, for a bullish candlestick. That's green candlestick. Then it will come and close at this level here. It will close at this top here. It will close at this top here. Now, what you want the market to do is the highest level is still going to remain the same. It's not going to change for whether a bullish candlestick or a bearish candlestick. The position of the high and the low is always going to remain the same. Yes, the lowest price recorded and the highest price recorded is always going to be at the same position. You understand? It's only the opening and the close, that will be different. It's only the opening and the close that will be different. So let me try and delete this one. Let me try and delete what we have here. Let me try, okay? Let me try and delete what we have here. Let me delete it. So basically, what you are seeing there is just an illustration. Now, the market is going to, what happened in this market when it was forming was that the market opened at this level. When the market opened, the buyer market, they were trying to push it. But what happened? The sellers took charge and they pushed the market to this low level here. Do you get what I'm saying? The sellers pushed the market to this level here. But because, this is a green candlestick, right? And this particular candlestick, it is the buyers that are supposed to win this war. You understand? It's the buyers that are supposed to win, because for this thing to show green, that's to tell you that the buyers eventually won that war. You get what I'm saying? So the buyers now, after they took power, they now push the market, push it till the market actually reached where it did what? Where it opened. It reaches where it opened. But the buyers kept doing what? They kept pushing till the market finally reached this highest level here. Yes, it reached this highest level. But what happened? The sellers did what? The sellers took charge again. And they did what? They pushed market from this high again. They continue pushing it till they reach this level. You understand? Then the market now closed at this level here. That's the reason why you see there is still green. So it's still telling you that upon all the fighting between these buyers and the sellers, the buyers actually still won, because the market opened and the market closed higher than the open price. You understand? The market opened here and closed at this level, which means that the buyers won. Though it was not a clear winning, and this is the reason why I will tell you that it's not a clear winning. This is our buyers zone, if you still remember very well. This is our buyers zone, and this top here is our what? Is our sellers zone. Is our sellers zone. Our seller zone. Now, our seller zone. Let me try and enter. Now, what you should understand here is that this higher week here, this week you're seeing here, and this one at the bottom here, and this one at the bottom here, if you see, they are almost like the same thing. So basically, the criteria that you'll be seeing, or what you'll be noticing in a spinning candlestick, is that they are going to have equal higher week, and equal lower week. I don't know if you are understanding what I'm trying to say here. For this spinning bottom, the market opened here, closed here, right? But if you look at the week, this week you're seeing here, let me try and use my cursor to explain. This week you're seeing here, the market, the week, the movement from here to this here, and the movement from this level here to this level here is almost the same thing. So there's higher week that is equal to the lower wick. So the wick at this level here is same thing at this level. That is how you can recognize spinning candlestick. So if the candle is now green, it is a spinning bottom. But if it is red, you call it a spinning top. You understand? Now, spinning bottom, I told you earlier that it will be occurring at the bottom of an uptrend. I said it earlier that if you are having an uptrend, for example, now market is going up, market is going up, market is going up. The only place you want to be seeing your spinning, it's not like you cannot see it in any other position. You can see your spinning here. You understand? You can see it here. But if you see it there, you are not planning to use it because it is not going to work there. It is meant for buying, not for selling. You understand? Now, you want to be seeing your spinning around here. Around here. You want to be seeing it around here. You understand what I'm saying? So that is that about that. That is that about that. So let me just delete this. And let me now draw the next one, which is called our spinning top. Now, this is basically going to look like exactly what we drew in our spinning top, but it's just going to be a red color. And the color here is what? Is red. It's red. Now, what you need to understand about spinning top is that the market opened at this high level here. This is the open price. This is the open price at the top here. You get this is open. Because I told you that the red candlesticks will open at the top and they will close at the bottom, right? So this is basically where the market now was closed. It closed here. It closed here. It closed here. So I'm coming. It closed here. Now, the high and the low is going to remain what? It's going to remain the same. This is our high. Whether you are dealing with bullish or you are dealing with bearish candle, the high position is still the same thing. And this is our what? This is our low. This is our low. So, what you need to do now is, whenever you see this candlestick, and you should have, I told you earlier that you see your spinning at the bottom of an uptrend. This one now, the case is different. You'll be seeing it at the bottom of a downtrend. Sorry, at the top of a downtrend. You understand? At the top of a downtrend. So if, for example, this is a downtrend, right? This is a downtrend. The market is trending downward. It's trending downward. You want to be seeing your spinning at this position. You get what I'm saying? This is where you want to be seeing spinning. You want to be seeing it here. You want to be seeing it here. You want to be seeing it here. You don't want to see it here. Let me put it here. If you see your spinning here, don't use it. Yeah, it is appearing at a wrong position. Now, what you'll be seeing here is, let me try and indicate this place now. You use it. This one, use it. This one too, use it. But you see this one here, don't use it. Don't use it. If you see spinning here too, this is at the bottom of a downtrend. You're supposed to be seeing it at the top of a downtrend. Don't use it. Yes, if you see it here and you use it, you are doing the wrong thing. Yes, this spinning candlestick now is a correct candlestick 100%, but you are seeing it at the wrong position. It is occurring at the wrong position. The only time you need to use it is when you see it at the top here. You now use it to sell. What you just do is you pick up your short position too, and you enter at the candle close. This is where the candle will close. You understand? You put your stop loss above that wick, then you sell. You sell. You understand what I'm saying? So that is that about that. That is that about that. Let me just delete this thing, and let me try and explain what I'm doing here, what I'm talking about here on this spinning top. We have 1 minute left, but because today our network gave us issue, I'll try and extend the time by a few minutes. I will extend the time by a few minutes. So I'm very sorry for what happened today. It was never meant, to happen. But there's nothing we can do if the network is giving us issue. We just have to keep, trying. We are trying to improve our network, but honestly, it's not just enough. So let's explain this thing again. I said for any red candlestick you see, example, spinning top is a red candlestick, right? The open price will be at the top here, the close price will be at the top, at the bottom. The story behind this formation is that when this market opened at this level, what happened was that the buyers and sellers were there pushing down, pushing up, but the sellers were able to push the price down to this level. They pushed the price down to this level, this lowest point here. But before the time 15 minutes candlestick we are using as an example, as an illustration, as a case study here. Before the 15 minutes finish, the buyers took charge again. What did they do? They pushed the market. They continue pushing. They push it past the close price because the market have not closed yet. You understand what I'm saying? The market have not closed yet. They push it, push it, push it. The market reached this level. The buyers were strong enough to push the market up to this level. But because the sellers were the one that owned this market, and that's why you see that the market printed a red color. The sellers now do what? They now push the market again, and the market now finally closed at this level. You understand? Now, there's something you need to understand about this spinning bottom and spinning top. Let me give you a very clear example here. Now, you see this spinning top and spinning bottom you're seeing. Don't use them to trade. Yes, they will fail you. The way you used to avoid dojis, all these dojis you're seeing here, the way I told you to be avoiding them, the way I told you to avoid dojis, that's the same way you need to avoid spinning. Why? Because if you look at this wick, the higher wick and the lower wick is like equal to each other. That's why I write it out that equal and higher wick. Do you get what I'm saying? It simply tells you that the buyers and the sellers participated equally in that market. Yes. The winner was not clear enough. Yes, they participated equally. The only reason why you are seeing green here was because the market closed above the opening price. And the reason why you are seeing red here is because the market closed below the opening price. That is the reason why you are seeing this color you're seeing here. It doesn't tell you that it is the buyers or the sellers that won. No, it's not like they won clearly. It was an unclear winning. You understand what I'm saying? So basically, for you to see equal wick at the top and equal wick at the lower part here, it's telling you that they participated equally. So that's why I tell you that this particular spinning bottom you're seeing here should also be classified as an indecision candle. An indecision candle. You understand what I'm saying? They are classified as indecision candles. Before you can use them to make any decision, you need to see extra confirmation for this spinning bottom you're seeing here now. You know it's a green one, but what you need to do before you enter that trade is to see something like either a pin bar or an arm. That is only when you enter that trade. If the market did not give you pin bar or an armor, let's say for example, the market now come and give you, let's say after you see your spinning bottom, the market now come and give you a shooting star, or the market gave you an inverted armor, which is the bearish candlestick, right? You just know that don't go and decamp and change your bias and say, okay, since the market is not giving you a red one, you want to go and sell. Don't sell, because it's just a trap. Yes, this spinning bottom you're seeing here was initially meant to buy. So if you're waiting for another confirmation because you don't want to use spinning bottom to enter your trade, the confirmation you're going to see is supposed to be a buy candlestick, a bullish one like a pin bar or an armor. If you now, for example, see a shooting star or this other one, inverted armor, don't go and switch side and start saying that you want to go and sell. Yes, if you sell, you're going to lose that trade because you're actually switching side too early. The market has not, before you can say you want to decamp from one bias to another one, before you can say, okay, I'm not buying again, I want to go and sell. As a trader, there are some extra confirmations you're going to see, and we have not gotten to that level yet. But let's just explain based on candlestick for now, for our own level. So for you not to see that buy candlestick as an extra confirmation when you were waiting for this spinning bottom, that means you're not entering that trade. You will stay clear of that market. Don't enter. Just leave it, let the market be going. Miss that trade purposely so that you will not lose your money. Same thing for this spinning top here. This spinning top, When you see it in the market, you want to fold your hands. Don't trade it. Wait for extra confirmation like this particular one. If you see Gravestone Doji again, don't trade it. It's still not a good confirmation. It's still an indecision. What you want to see as a confirmation is either a shooting star or an inverted hammer. You understand? Before you can decide to see what you want to use this candlestick to sell. So if for any reason you now later see a bullish candlestick after you've seen your red candlestick, don't go and switch side and say you want to go and start buying because you now see green candlestick. You lose money. What you are supposed to look for is to wait for another bearish confirmation like a shooting star or an inverted hammer before you now start selling. So don't decamp anyhow in the market. Don't say because this market is not giving you this, you want to switch your bias and start doing the other thing. Don't do it. It will not help you in the market. It will not help you in the market. So basically, I've added extra 7 minutes for us. So we are actually done with the class. So please, if you have any question, please tell me in the comment section so that I'll be able to address it before we call it a night, please. I'm checking my comment section now. Drop any question you have on this topic I'm teaching you. Drop it so that I will, explain it to you. We are going to be opening a signal group very, very soon. So for those of you that you want to start trading, maybe you have money, you want to fund your account, we are going to be providing you with signals so that you can do what? Start trading and start making money. Yes, I want you to know that this thing we are teaching you is not ordinary teaching. Yes, you are going to make money off this market. So the way you can start making money is to try and fund your account. Now, I've already dropped the video guide to how you can register with our trusted broker I've already pinned it in the Telegram channel. So go and check that video and follow it and use it to click our trusted brokers link so that you can use it to register for your account. You understand? Once you register that account, you open a trading account. Then if you know how to do it, just DM me. Yeah, I'll guide you on everything. Just DM me. Once you want to open your account to deposit, tell me and I'll guide you on everything. So that signal group is for those of us that are ready to start making money. You understand? We'll drop our signal for you, and all you need to do is just copy that our signal and go and input the values into your trading account and you enter the trade. You understand? So I'll see you in our next class. And let me use this opportunity to advertise our price action mastery class. You know what this beginners class we are teaching, all these beginners teachings we are doing here is not really going to be enough for you to become a trader. I believe you understand what I'm saying. You cannot be trading as a beginner. You go and enter market and start putting your money without having knowledge. So Leverage Academy is going to be giving you an opportunity to learn a strategy, and that strategy is called a price action mastery strategy. The price action mastery strategy. Now, this price action mastery strategy I'm talking about is going to cost you just 30k. If you are interested, nobody is forcing you. Yes, nobody is forcing you. But if you know you want to have your own strategy, you want to be able to analyze the market on your own without depending on anybody. You want to analyze the market by yourself and enter trade and make profits by yourself. You want to make decision on your own independently. This particular price action mastery class is for you. Yes, it's for you. This file you can see the Academy price action mastery class. You want to learn how to trade with precision. You want to learn a strategy called price action. Yes, the full course is going to be a 3-month program. Yes, you're going to be learning this for 3 months. Yes, it's just 30,000 naira to learn the full course. And during this price action mastery class, we are going to add people to our signal group. And that signal group now, before you learn this price action mastery, I understand that you want to start making money. You want to be learning and earning at the same time. So for you to be able to do that, once you register for our price action mastery class, you have access to our signal group. Yes, because we don't want to provide signals to beginners, honestly, because as a beginner, you cannot use signal. you cannot use it. You cannot use it well. You understand what I'm saying? But once you enter this price action mastery class, at least all the beginner's knowledge you have, coupled with the fact that you have started learning price action, you'll be able to use signal and make profits for yourself. So this particular one now, the bonus you're going to be getting is our access to a signal group. So if you have any question on our price action mastery program, please just DM Mr. Leverage. DM Mr. Leverage. You see the number I'm projecting on my screen? Yes. Try and message that number. Everybody has Mr. Leverage number. Message the man, and he's going to tell you what to do so that you can register. So immediately we finish this beginners class, your spot is already secured for that price action mastery class. We've seen some people that have registered already, because in our last class we did an advertisement on this too, and some people have already messaged me and they have already secured their spot already. They've already registered for the price action mastery class. So if you're interested in joining the class too, so that after this beginners 30 days class, you can join us in learning that price action mastery, just DM Mr. Leverage. So that was going to be all for tonight's class. I'm going to see you guys on Wednesday. And our video, this live session is the last one we did, the last class, we're going to post it on our YouTube channel tomorrow, please. And this one we did tonight is going to be, let's say, on Wednesday, probably, before the next class. So thank you very much. I'll see you guys later.